The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, we saw a little bit more green in the wheat trade on the day Tuesday amid the escalation in tensions in the Russia-Ukraine war, although we did finish a bit off the highs. Soy complex, beans in particular, came under some pressure Tuesday. Corn was largely stuck in the middle. Cattle, though, had a strong day to the upside. Let's take a look at what's happening in these markets and run through things. Joining us now for market analysis, Tyler Schau with agmarket.net. Tyler, good to catch up with you again, my friend. And sounds like some snow in the far northern plains, northern North Dakota into Canada. You guys getting any white stuff flying around your farm?
It's flying around, not really sticking. We're on the very southern edge of that system. So it sounds like as you get north up into the Canadian border, they're looking 8 to 10 inches of white stuff on the ground over the next day or so. Wind's supposed to get pretty nasty here this afternoon, but I guess that's what you expect when you live in western North Dakota.
No kidding. No kidding. Well, so much for having an extended fall application window or things like that. I think you guys are used to that, though. Snow flying early kind of shuts down that window in many cases, doesn't it, Tyler?
Yeah, we've been really fortunate. We've had a really, really good fall so far. The 15th of November, last week, we were out in t-shirts. So it's been a really good fall. Farmers pretty much been able to get everything wrapped up. There's going to be a few sunflowers left out in the field yet, but that's not all that uncommon for this country this time of the year. So yeah. I think everyone's about ready for snowfall.
Definitely. Well, let's take a look at these markets and maybe do something to keep a few folks' minds off the snowfall, at least right now. Kind of a mixed bag on Tuesday, I would say. I alluded to this in the open. The wheat trade has been getting some strength amid the escalation in tensions between Russia and Ukraine and the use of U.S. missiles now being allowed into Russia from Ukraine. Yet, we're not shooting limit higher in the wheat trade either. So I just have to wonder how much the trade is really reading into this escalation of tensions across the wheat complex. What do you think, Tyler? Let's start there.
My thoughts on the Black Sea region over the last couple of years has just been the market's kind of gotten tired of that story. And until we see, I don't even like talking about it because it kind of almost sounds somewhat heartless, but until we see some type of action that actually does prevent grain from leaving Ukraine, I think you'll continue to see small spikes like we saw yesterday off of that news from the weekend that the Biden administration was going to allow for long-range weaponry to be used against Russia. In the overnight, we saw another spike because there were reports that Ukraine did use a long-range missile and struck a Russian ammo depot inside of Russia. I think there was kind of an initial spark to the market, thinking maybe they would see some type of retaliation from Russia. We have yet to see that. Russia does consider it an escalation of war. So I think we'll kind of, increase tensions, but I come back to until we see that those tensions limiting physical grain movement, I don't know that the market's going to bite like it did in 2021 when this thing really took off.
Well, on top of that, we've of course seen a higher U.S. dollar that's acted as a headwind for grains across the board here in the U.S. I know winter wheat ratings saw a bit of an uptick this week. So, I mean, the fundamentals in the wheat complex as a whole don't really seem to be too great. They're not too warm and fuzzy and cozy. It doesn't feel like right now, Tyler.
No, we've seen a really good improvement on that winter wheat conditions report. It only comes out for about a month here in the fall. I think the first one we got was late October, and the good to excellent was like at 38% good to excellent for the 18 states that report. Yesterday's was, I believe, 49% off the top of my head. I'm not looking right at it. So a pretty big increase in good to excellent conditions in a pretty short amount of or short window of time. It's 3.5 weeks on it. So those rains that occurred, they did their job. They've bolstered that wheat crop that's in the ground. I got some friends And actually, my folks live down in Kansas, and they all say it's amazing how it's changed in the last just few weeks with the rains that they've received. Also, bear in mind now that crop's going to go into dormancy here. And so I'm not going to I'm not going to come out and say that it doesn't matter what happens for the next few months. I will say it matters less now that that crop goes into dormancy. If it does dry up, yeah, it might not be good. But the important time for rain was when we got it here the last few weeks. Now, the next important time is when it comes out of dormancy there in the early spring.
Absolutely. Absolutely. All right, let's shift over and talk soybeans here. It just felt like a lack of a fresh news story about the best thing I could find, best explanation for soy on Tuesday. Finding some pressure, breaking below $10 in the Jan contract again, down 11 and a quarter on the day. Um, your take in soy just had to feel like good weather prospects in South America, some concerns about the overall Chinese economy again. I mean, anything else we could find in this soy trade? I'm trying to make sense of it right now, Tyler.
I think the veg oil trade is gonna what is really what's gonna pull that soybean market. Soybean oil closed down about 68 cents in your December and January contract today, and so yesterday we saw soy oil kind of rebound, or Friday and yesterday, and beans kind of followed today, came under some pressure and just kind of pulling that bean market lower. You're right, that drought story in South America is over, and it's really not a story. And I would argue that if the weather continues the way it has been and the way it's forecasted to, you're probably going to see those private crop estimates start to move higher. A lot of those private crop estimates in South America are actually currently lower than the USDA's forecast. And so that's been, a lot of people have been pointing to that, saying that one or the other, one of them's got to be wrong. I'll point out their estimates. So, you can't prove either of them are right or either of them are wrong. It's just where they're estimating them to be. But I would guess if the weather continues, they'll see those private estimates start to leak higher and match up to where the USDA is at. Yeah, it's just every day we move forward and the weather stays good, and we can't really find that bullish catalyst to push beans higher. It's probably they feel heavy. So if we're not getting a bullish story, my gut tells me beans are going to kind of drift lower as we move throughout the wintertime.
This news too that Brazil's ag minister mentioned on Monday. Supposedly, they're going to announce some ag cooperation deals of some sort with China on Wednesday. It sounds like it's going to be pork and beef and maybe fruits. No indication on grains and oilseeds. I guess I look at something like that though as we already know Brazil and China are working together. So I can't imagine that, depending on what that news is, can't imagine that's going to have a huge impact on our markets, will it, Tyler?
I My take is that it doesn't. Brazil and China started a partnership circa 2016, 17, 18 in the initial Trump era trade war, and not saying that's a good thing or a bad thing. It just, that's what occurred, and China decided they didn't want to be beholden to the whims of U.S. policymakers, and so they started a friendship or a relationship with another producer and provider, and I think that train has left the tracks. 8 years ago, to be
Mm-hmm.
right honest with you, and there's no slowing that up. I would assume we'll continue to hear more and more of that. But bear in mind, it doesn't mean that the U.S. is no longer exporting any beans. It just shifts the balance of trade around. Someone at some point was buying Brazilian beans, although obviously Brazil has increased their acres and their ability to produce more. China's going to gobble most of that up, but that just means some of the countries that we're purchasing from Brazil they're going to have to find an alternative supplier. So the market's shifting. There's a lot of dynamics there. We're shifting a lot of our demand to the crush side. That's why it's really important to see how these biofuels mandates play out within, that are now in policymakers' hands, and a changing administration. There's another whole set of issues that are up in the air, and everyone's trying to figure out.
Yeah, issues, unknowns, and a lot of different things we're going to have to watch here over the next several months ahead, no doubt. Tyler Shaw with agmarket.net's our guest analyst here today. Let's go over to the corn market. Corn kind of stuck between wheat and bean trade on Tuesday. That's not unusual. We've seen that countless times, I feel like, here. Just corn couldn't decide which way to go, so we stayed firm on the session for the most part. You look at this corn market, better fundamentals, I would say. Export demand's been on fire. What's your take on corn here heading into the final weeks of the year, Tyler?
The we would say the fundamentals have been better than what we had expected. We've seen that demand creep back in. For the last year, we've been talking about slipping demand, and that's the function of the market. Prices run higher, and end users figure out how to do the same with less, or do less with less, is probably what I should say. As we've seen that price come down, that's bought some demand and brought some demand back in. We're seeing Mexico come in, and they've been way ahead of pace, and they're purchasing. That may have been to get ahead of any potential trade issues that do arise with the Trump administration. That's kind of the rumors we've been hearing through some of our commercial partners. Um, and so we have kind of started to see that sale, or that sales announcements of slash sales on corn, at least, slow up just a little bit. Not saying that it's done, but the sales that are on the books, if we can keep this kind of a pace, USDA is going to have to do something with that export market. We feel the same thing with the ethanol. If they keep grinding corn up into ethanol at the pace they have been, and right now, some people will point to ethanol margins being pretty thin. Our take is that ethanol industry has figured out how to run on thin margins for many, many years. So I don't think that's going to slow them down right at the moment. So the demand seems strong. I just don't know that if I'm a producer, I'm going to go and sit and wait and cross my fingers for substantially higher prices. We're going to need to see some other catalyst outside of export and ethanol demand, because bear in mind, we're still sitting at I think 1.9 some odd billion bushel carry out at the end of the year, which is not exactly bullish or fearsome that we're going to run out of corn anytime soon.
Looking at basis and spreads for both corn and soybeans, those have been looking okay here as of late. I mean, any big notes there as you take a look at cash and spread action? I know we got December options coming up for corn, for instance, things like that. Any big notes you're watching on that side of the ledger, Tyler?
Well, the spread action has been somewhat puzzling, because we have been in what I would still say is a longer term bearish market. The spreads have turned bullish. We've seen a lot of those spreads, calendar spreads, that the bull spreading has taken over and pushed to pretty high levels, which is not necessarily. I should say it's slightly uncommon for the longer term bearish trend that we've been in this market. Typically, you see those spreads widen out, and they've done the opposite here over the last really couple months. I don't know that you're really gleaning a lot from it, as much as just maybe we push this thing down too far, and these end users need to get their hands on some crop, and so the way they're doing that is through basis and through spreads, and coming in and buying the upfront contract as a hedge to get it bought, and they're willing to turn that into a physical transaction if needed. So basis in a lot of areas has stayed strong. Our recommendation to our producers is still, when you get the opportunity to sell a basis that's abnormally strong for your area, take advantage of it in some way, shape, or form. Don't look into it too much like it's the market getting ready to take off on a rocket ship. We just think, we go back to that really burdensome carry out of 1.9 billion bushels right at the moment, and just find it difficult to see us pushing significantly higher in the short term.
How about over in the livestock trade? Cattle feeders have been leading the charge here the last couple of sessions. Good strength there Tuesday. Should we be getting a little more friendly in the cattle market again, Tyler? What do you think?
That's been a impressive market to watch. The cash market on the feeder calf has just been absolutely bananas. some 4 weight calves been selling for over $4 a pound up in this country. $1,600 400-pound calves is just unbelievable, at least to me. There's really been no signs of slowing down. I think it's a function of a couple things. Go back to when we're talking about winter wheat, and you've got really, drastically improved winter wheat conditions in the southern plains. Remember, the last few years they've come into this time of the year and they've been in significant drought and have throttled back the number of calves that they ran on winter wheat pastures throughout the winter. I think you're seeing some increase there. You've got a lot of farmers in the northern plains into the I states where they've got a lot of cheap feed. In my country in North Dakota, we had a really good spring, put up a lot of hay. A lot of guys have got full hay piles. They've got full silage piles, and they're looking to walk that feed off the farm and turn it into cash versus selling that feed, if that makes any sense. And so there's just big demand. And don't forget the numbers. We know this isn't a surprise, but the cow numbers have been low for a couple years. There is some talk like maybe we're starting to see some heifer retention. Personally, I'm still not in that camp. I don't think that's what's driving it. I just think there's a lot of people wanting to get their hands on these calves and feed them because they've got the feed, and they figure it's a better way to get that product moved than actually selling the feed. So I think that's a lot of what's driving this feeder calf market. I hope it continues. But my concern is the last 2 years you've been able to come in and buy these high priced calves this time of the year, and you've been able to lay that risk off using LRP, using put options, some type of futures transaction. It is more and more difficult to do that where we've got the upfront much higher than your back months. So I'm a little nervous that at some point this party is going to come to an end. I don't know when that's happening, and I want to be very clear. I'm not saying that's going to happen next week or even in the next 6 months. It's just something I think a producer's got to be super vigilant about, because you're laying a lot of cash out there to get these animals on the place.
Absolutely. Cattle on feed coming up Friday. There's some talk of potentially record placements. Anything on that you're concerned about with that report coming up at the end of the week?
I've dug into it a little bit. I can see the high placements coming in. One of the things I think is happening, and I just don't think our system of capturing this has caught up to what's going on in the market. There's a lot more cattle being sold or contracted earlier in the year, right, than in July and August on these internet video auctions. They get contracted and now they're getting shipped into the feedlots. So all these cattle that are coming in maybe aren't at these high prices that we're seeing right now. A lot of those cattle were bought significantly cheaper. That changes those break evens on those fat cattle. But yeah, I could see that those placements coming higher as we pull more of these cattle in the feedlot. The other thing going on is probably going to affect those placements that, again, I don't know that our systems have caught up to how to capture it. There's a lot more grass calves being fed or backgrounded, and they're not going directly into the feed yards. So up in my area, and I've maybe even said this on your program before, I work with a decent sized book of business, and the overwhelming majority of them have backed off on the number of cows that they run and are using more of their grass to run yearlings. And so I think some of that's what's driving some of those changes in that placement number. Just got more cattle now coming into feedlots. They're probably going to come in at 900 to 1,000 pounds. So it's a lot different than it was 4 or 5 years ago when the bulk of the cattle were coming in at 6, 7 weights.
Hogs feel very fatigued. Real quick there. Any notes for you on the hog side?
Well, I've been saying hogs feel fatigued for almost a month now. But hogs do tend to trade, V bottoms and V tops, and we've put in a pretty high bar there, and have kind of broke through some support, but they're hanging in there. And the cash, same deal with the hogs as what's going on in the cattle. The cash market stayed firm. So apparently, demand for proteins, animal protein specifically, is still going strong in the U.S., and that's a good thing.
Tyler, I'm sure folks want to reach out and have a conversation with you and the team there at agmarket.net. Just checking out that website, taking a look at your intel and much more is a great way to get started, isn't it?
Yeah, go to the website. We got brokers located from North Dakota all the way down to Tennessee. And if you're interested in hearing what we have to say, we'd love to hear from you.
Agmarket.net for more. Tyler Schau, always good to catch up with you, my friend. Thanks for joining us on Market Talk this week, and we'll talk to you again soon.
You bet. Take care, Jesse.
Make sure to subscribe to the Market Talk YouTube channel. There, you can watch our latest interviews with the top market analysts in the country, find bonus content, and much more. Just go to youtube.com/markettalkag and hit the subscribe button, or you can search for Market Talk Ag on YouTube.